right. Well, I know we're a minute after 4 Eastern, just after 1 on the West Coast. So thank you for everybody for joining today's TMC Connect web broadcast entitled "Where Have All the Good Ones Gone?" Sales Boomerang, featuring their loan loss report. And before we get started today, just want to remind attendees, keep checking out Mortgage Collaborative's TMC Connect event calendar up on our website. Going to keep continually updating new sessions that we're putting together over the coming weeks, largely based off the feedback from you guys, our preferred partners, and our lender members within the network. And then just as far as today's discussion goes, whether you dialed in via your computer or calling in on the phone lines, all lines have been muted, and that's done only just to avoid any background noise in your area, or make sure our attendees can hear today's presentation clearly. Want these discussions to be as interactive as possible, so please feel free to submit any questions that you may have for our discussion leaders today throughout the call, and I will happily cut off Alex or Kevin at any point to verbalize your question in real time so it doesn't get lost in the shuffle. Chat Q&A function, both of which are accessible at the bottom of your screen. Just pop the questions in, I'll see them, and we'll queue them up. Reminder, today's call is recorded, so attendees will get an access to a copy of the recording as well as a copy of the deck and a follow-up correspondence that you'll likely receive tomorrow. And let's start to jump into it. So leading today's discussion from our preferred partner at Sales Boomerang, the mortgage industry's first automated borrower intelligence system, we've got CEO, co-founder, and as I think is the best title in the business, Chief ROI Booster, Alex Kusishin. Hey, Alex, how you doing?
On. How are you?
Oh, I'm living the dream, my friend.
You're drinking some coffee along with me?
Oh yes, my 4 p.m. coffee.
Coffee, yes.
Whatever floats everyone's boat, right?
That's right. That's right.
So also leading today's discussion, we've got Chief Lending Officer at Paramount Residential Mortgage Group, better known as PRMG, Kevin Peranio. He's currently on the road, but you'll get to see his face shortly. Hey, Kevin.
You don't see it, but I'm also wearing my No Bar Left Behind t-shirt in solidarity.
Love it.
And one of the benefits of working in fintech like Alex is there's no, stuffy old white rich banker in a suit and tie telling you can't have bourbon on a conference call. So I'm lucky you, and I'm super jealous, Alex.
Hey, listen, you're driving. Don't be drinking.
To be fair, my car drives itself. I'll be okay.
Oh, very good. Well, then kick back and have a cold one.
So my last plug here real quick before I turn it over to Alex. Guys, if you really enjoy the discussion, the back and forth today between Alex and Kevin, I absolutely recommend you check out Sales Boomerang's new YouTube series called Bourbon and BS. I didn't tell Alex I was going to plug it beforehand, but I got a chance to see Alex and Kevin's episode from just last week, and I love the back and forth and getting to know you guys a little bit deeper level. So it's a great series. Keep it up. And I guess on that note, I'm going to turn it over to Alex to kick things off.
Sounds good. Thank you so much, Tom. And look, yeah, Kevin, self-proclaimed most boring person in the world. I love it. If you haven't seen that episode, it's on LinkedIn too, and it is hilarious. Kevin does not disappoint, and it reminds us why we love him so much. So guys, thanks for joining in. Tom, thanks for having us on TMC. Thanks for putting this together. Always a pleasure. It's going to be a fun episode. If you've ever hung out with me and Kevin, you know that we could just sit and throw jokes at each other and have a great time. But more importantly, for this conversation, Kevin and PRMG run an incredible organization focused on experience from top down, from everyone in the organization to every one of the referral partners to every one of their consumers that they work with, and we're going to talk about that today. And so just a quick reminder, for those of you that don't know exactly who Sales Boomerang is, we are the only automated borrower intelligence company that makes the process of understanding who in your database is ready for a loan effortless and frictionless, which is one of our favorite F words, right? The goal of course, for you as a lender and for your organization and for your loan officers, is to be able to identify all of the mortgage-related transactions so that you can give the advice and the guidance that your borrowers expect. And just so you all know, on average, your borrowers will have 11 mortgage-related transactions. And so we want you to have a chance to have all 11, right? If you meet them on the first, get the next 10. If you meet them on the fifth, get the next 6. So that is what our entire mission is about. No borrower left behind. You heard Tom talk about it. You heard Kevin is wearing the t-shirt. So again, for those of you that don't know and just logging in, checking it out for the first time, looks great on you, Tom. Just wanted to give you guys that insight as to why we're talking about this. What gives us the right to even talk about retention, right? It's our entire focus. It's everything that we think about. So on today's agenda, we're going to be talking about why is retention important, the mortgage industry retention versus PRMGs, the benefits, 1 to 5, the journey, the high versus low retention rates. Why do you care about the loans you've lost? Why should you care about the loans you've lost? The breakdown of what a loan loss report is, and of course the takeaway. Let's jump right into it. And Kevin, I know you're driving, so be careful as we ask these questions. We also will have a special guest. Hopefully we'll have some time to bring her on if she has time to communicate with us. Samantha, who's the top, one of the top producers at PRMG, and she's just incredible at acquisition and retention. So it's fantastic. If we can get her to talk to us at some point in this conversation, you guys will love it. So why is retention important? Now, many of you may be thinking, Alex, what a silly question. But you know what? Let's really dig into it. So, Kevin, let me throw this at you. Why is retention important?
Well, just, there's so many different ways to answer that question, but, the relationship is the best.
Kevin, your voice sounds a little distant, just so you know. Don't change much. Be careful while driving, but just want you to know it sounds a little distant right now.
Oh, okay. Am I better now? Can you hear me now?
I can hear you. It's just distant. You can keep going. I just want you to know, to be aware that you may need to speak up.
How about now? Is that much better?
Oh my goodness, night and day difference.
Okay, so I took off my speaker, have the phone up to my ear. So let me just say, this is a relationship business, and remember, before somebody ate bat soup in Wuhan, China, we were talking about fintech being our biggest challenge.
Mm-hmm.
And fintech disruption and the elimination of the originator and the realtor and all this speed the lead activity by some of the largest lenders out there that have way more money than we do. And they're getting to the borrower first. And we all know on this call that the best experience for a borrower is dealing with a local originator that is in the community and has all the tools that those large fintech companies have. Those companies that want to come in and steal our relationships in the local community and take that money back to their cities in Seattle and Detroit and San Francisco. And so this is a way to attack them. This is our fintech. This is our way to keep retention. The average borrower does what? Almost 10 mortgages in a lifetime? Now, if they're doing refinances right now at these rates, it might only be 5. But who knows?
Yeah.
Maybe rates go lower and maybe rates go lower in the future. But the point is, a borrower that is your relationship will buy other property. They will refinance their existing property. They will refinance other properties they buy in the future. And if you don't keep in touch with them, then you've lost that whole chain, and then anyone they refer to you down the road. And that's exactly what retention is all about. It's retention of the relationship, and it's also retention of the economics.
Hmm.
So for us, I think that's just, this is a tool specifically with Sales Boomerang to have speed to lead type trigger activity that you can monitor, that all the large fintech firms use every day by the tens of thousands of triggers.
Mm.
So you just have to, and here's the thing, it's an easy trigger and an easy, fintech vendor partner with Alex to be able to adopt into your system. It's not just because he's cool and, we'll drink bourbon on camera and have a good time with you, but they actually make it easy to do business with him. So I'll leave it up there in so I don't talk about it forever. I'm not sure if Samantha Zumwalt is on, but Samantha is our #1 originator at the country, and she is out of one of our oldest branches here
in the high desert. She's incredible. I mean, she's going to have a record month. She and I talked this morning. She's, as an individual, she's going to pump out over 43 units this month. It's crazy as one person. And she's a hard worker, obviously. She's a mother of 4. And it's amazing the level at which she works. So, when it comes to retention, instead of just KP talking here, maybe get the perspective of, a top originator in the industry. And Alex, if you want to kind of rephrase the question, and we'll make sure that she's on and she was given.
Sure. No, we'll definitely get to her. I wanted to start with a sort of a layup question, because it's one of those obvious things. Of course, retention is important, but I think you mentioned it and put it in really good terms, that look, when it comes to retention, it's the retention of the relationship and the retention of the finances too, right? Like that's very important. And there's something that what you talked about, the big fintech firms understand that repeat business, right? One of the best business models in the history of the world is recurring revenue. And retention is that recurring revenue, right? It makes it easier. As a matter of fact, I spoke to Samantha earlier today, and one of the things we asked about is who's easier to speak with, a new customer or an existing customer, a new prospect, a new opportunity, or somebody that's existing. And of course, she said it all depends on the situation, but she said clearly it's going to be the existing customer because of the trust, right? She used the T word, because of the trust factor that you have. And so, you don't see the screen right now because you're still in the car there, Kevin. I'm going to move on to the next slide. So retention is important because you retain the relationship and the finances, and it really creates that barrier between you and your competitor to possibly grab that business and say, hey, let me build the trust, right? You've done a poor job building a relationship. Let me get a crack at it. See if I can do a good job. Well, guess what? The industry as a whole does not do a very good job, okay? 20% retention rate, less than 20% retention rate. This is a CoreLogic statistic. Last year, Black Knight said it was 15%. This year, CoreLogic is saying it's less than 20%. So it's somewhere between the 15 and 20%. Based on some of the best data that we have out there in retention. That's pretty hard, right? For an industry that's this important to the country, to the world, to everyone, to the home buyers, to the lenders themselves, that's a pretty low statistic, right? And there's a lot of reasons I believe this is true. And one of the reasons we got excited about working in this space and possibly changing the statistic to a much better statistic is because of the relationship part, right? So here's the thing. Some of the predictions we made about why the industry is so bad at retention, one of those being the dollar amount of the transaction, right? And you're like, why would that be hard for retention? Well, here's why that might be difficult for retention, right? That is such a big number that you say to yourself, look, I make so much from one deal that I don't care if I get another one. I'm ready for the next one to come to me. The other part, right? So the dollar amount itself, you make so much that you may not care if you get the exact same deal again. You might want somebody else, or it might be, faster to get to someone else. And here's the other part about why retention may be so difficult in the mortgage industry. The distance between transactions. I get a home today, it might be years before I do something. Whereas in other industries, the retention may be faster because you have more engagement, right? There's more reasons to engage, more touch points. And so because of that distance and because of the dollar amount that says, if I don't get it from them, I'll get it from somebody else, because of the greatest marketing campaign in the history of the world, which is the American dream, right? This industry has not had a real reason to focus on retention, even though you've all wanted to, you've all said you wanted to, but it's been tough. But the numbers speak for themselves. Now, let me show you the retention rates that we did analysis on for PRMG. 20% is the industry average, less than 20%, 15, 20%. PRMG is currently at 65% retention based on the reports we ran for them recently, 65%. And how do we run this? We took a look at PRMG's funded deals for historically, and we looked at what they re-originated, right? The deals they got back from their existing customer base versus the deals they lost from their existing customer base. We're going to show you some statistics. You're going to see the numbers side by side down the road here in a minute. But how is PRMG so good at this? It's the reason why Kevin is on this call. It's the reason why we're going to be talking to Samantha. PRMG is really, really good, and it's gotten much, much better with all the technology they're rolling out, the relationships that they have with us. But it took the mindset. Sales Boomerang wasn't the magic bullet that solved everything. It took the mindset of wanting retention, understanding the value, the difference. What's the value in retention? Look, here's the value in retention, guys. Pay attention. This is important. This is an amazing example of what retention means. What are you looking at right now? So here's the chart. On the left is revenue. On the bottom, right, the axis here is time. So if you just, retain 5% of your business, you can see where your revenue is going to be, right? This is just an example, okay? If you were to double your retention from 5% to 10%, just 5% more, look at what happens, okay? You go from getting to 20,000 in revenue. Again, this is just placeholder numbers. This is just example numbers, to significantly increasing that to close to 300,000 in revenue over the same amount of time. Okay, just double, just adding an extra 5% in retention rates. What that does to your business is incredible. Most people can't believe it, but this is studies, this is facts, this is research, right? This isn't just Alex and the team coming up with numbers. There's resources behind this information. So retention is key to profitability, along with, as Kevin mentioned, the retention of the relationship, which will lead to referrals, which we'll talk about just a second as well, happier customers, all of those things, right? There's another very important stat, right? So the benefit of retention, a much higher probability of a sale, okay? Again, look at the facts, look at the numbers here. And I would love to see, I see people engaging and writing some things. Everyone needs to participate. The questions you have, the concepts, the ideas, let us know you're out there. Shoot, if nothing else, tell me if you're drinking along with me, right? Look at the probability. You have a 5 to 20% chance of closing a new customer, a 60 to 70% chance of doing business with an existing customer. I asked Samantha earlier on a call, and again, she'll probably bring it up when we talk to her later in this conversation. I asked her, I said, hey, you have a prospect and a customer. They're calling you at the exact same time. Which call do you take first? She's like, I take the existing customer, because I know I can get that deal done much faster. I can go through the process, no problem. And then I'm scheduling the conversation with the prospect, because it's going to be a much longer process to help them and get to the finish line. Fantastic. There's a really good reason why she's the top performer, top producer at PRMG. She understands the psychology, the purpose behind relationships, and what it means for the effort she puts in. I want to tell you right now, everyone is going to look back at this time, and they're going to say one of two things. There's going to be one of two things you're going to say. You're going to say, yes, we squeezed every possible opportunity out of the time that we had during the 2020 season of the biggest boom in the history of this industry. Or you're going to say the following: we could have done so much more. I cannot believe we missed those opportunities. I cannot believe we wasted our time. The most successful people, the most successful companies are those that manage their time wisely. Existing customers, new opportunities, okay? 60 to 70% chance of conversion, 5 to 20% chance of conversion. You don't want to say no to new opportunities. Of course you don't. But when two are there at the exact same time, priority goes with the existing customer. Why? Because if you want to use your time wisely and you want to look back at this moment and say, we squeezed every opportunity and we got as much out of this as we possibly could, and not kick yourself in the butt that you could have done 3, 4, 5, 6, 10 times more, then you're going to focus on what we're saying right now, right? The other huge benefit, right? Customer loyalty means better team retention. If you have great retention platform, great loyalty programs, ways to give your team the ability to do the retention, build loyalty programs, and give your team the resources. Again, this is why Kevin is here. And I want to pause right on this one for just a moment, Kevin. And I was buying some time, hopefully giving you a chance to get to your office. There he is. Look at that. The timing was perfect. He's got the purple jacket on. I gotta go get my purple jacket.
I know. Where's your purple jacket, man?
Oh, I gotta go get it. I gotta go get it.
That's like our thing we're supposed to do together. But yeah,
I know.
I'm here.
We're the Jacket Brothers. So listen, Kevin, when it comes to customer loyalty and customer retention, how important is it to have your team be, committed to your cause, to the company's cause, and love where they work and love what they do, how important is to keep the retention of your team, to keep the retention of your customers?
If you just add a couple more loans to your own employees' bottom line because you provided a tool like Sales Boomerang, or a better CRM that integrates with Sales Boomerang,
Yeah.
or set up a system to monitor these kinds of things, you've
And
provided
feel free
value.
to plug the CRM, Kevin. You can talk about who you use if you want to. It's up to you. I don't want you to not feel like you can't talk about your technologies, please.
Oh, of course. I mean, we've been on Surefire top of mind for many years.
Yeah.
And we have 1,100 loan officers. We are also rolling out Total Expert as an option. We are in the middle of that process. So we actually offer two. And I know that sounds crazy, but there are some people that are completely happy with Surefire and they're never going to leave it. And then there are some people that are at other places and they're used to Total Expert and they want that. And so one of our things has always been to give optionality here at PRMG. So we're doing that. Plus we're rolling out something for our wholesale channel in the TPO Connect portal. We're giving some options there. We signed a deal with Volley to put something out there as well. So we're pretty excited about. Yeah, we're pretty excited about that as well. So, just maybe it's worth, I don't want to ruin your flow, but when I get the chance, I'd love to tell about, when you think it's right, kind of the evolution of our thought and how we used to do retention, and then how it evolved, and then where Sales Boomerang came into that mix 2 years ago.
Yeah, you know what? I think the time is great right now. So like the question on the table is, how important is it to take care of your team so they can take care of their customers? And I think the evolution of your thinking is important. I'd imagine everyone on the call would love to hear it. Please chat, put a couple notes in chat to say, hey, you want to hear the story right now from Kevin about
I'll just fire away. I'll just do it.
Yeah.
So we have we always gave our borrowers back. Rich, I got you, buddy. We always gave our borrowers back to our originators, regardless of channel. So just for those that don't know, we're half retail, half TPO, and that TPO is both wholesale and correspondent. That number kind of ebbs and flows depending on what's going on at the market. Sometimes retail is a little more, and sometimes TPO is a little more. But we view all the originators, however they want to be served, we try and serve them. And one of the things we've always done is help them try and retain those relationships. Now, we've always been a servicer, so we've always serviced our loans. So when the loan closing funds, if it's in our book, in our portfolio, we can do whatever we want. So, before Sales Boomerang was implemented about 2 years ago, it was like if we got a call for a payoff, or the borrower called and said, hey, I have a question about a refinance, can someone help me? Obviously we would have wished that had gone back to the originator, but that doesn't always happen, right? You'd be surprised how many times, it's out of sight, out of mind, and then they call the servicer. Now, we do sell off a portion of our loans. Up until this year, I would say we sold off probably a good portion of our loans. So we've always tried to give the borrower back to the originator, because that's their relationship, that's their borrower, that's their work they've done in the community, not to be stolen away by fintech. So this was our chance to do it. Now, what's interesting is a couple of years ago, United Wholesale really started promoting the way, I guess they started promoting the way that they give those clients back. And so I started doing some digging and looking around. We use a sub-servicer called Sinlar, and they're on ancient technology. I don't even know what they're on. No one there's ever called me, but I know that we can't white label the name of the originator on the borrower's statement, on the mortgage statement. Hey, if you have an issue, call Sam Zumwalt, or if you have an issue, call broker ABC. But they just don't have that ability. And our competition was lapping us and bragging about it, and made it sound like, someone even said that we're a wholesale lender, we're a bad guy because we steal our borrowers away from our originators, which is BS, right? So we've actually been doing that before that marketing was put out there to make us look bad. So we had to step our game up, and we did. And so insert Sales Boomerang. So in case you're not familiar, Sales Boomerang basically has 5 triggers, and there's 2 of them that you really should only use if you hold the asset. So actually monitoring someone have their credit pulled after you've closed in front of the deal, that's a very dicey thing. We don't do that on loans we sell to investors. So we sell to investors out there like PennyMac or AmeriHome or Wells Fargo, Mr. Cooper, Lakeview, all these different ones. So we don't monitor trigger on credit or new debt taken up, because that's monitoring someone else. They bought that asset, and we feel that that's kind of crossing the line. But every originator keeps in touch with their borrower. Hey, happy birthday, or happy Valentine's Day email, or happy National Tortilla Chip Day, or whatever it is. So there are other, and that's
Happy Bourbon Day.
That happy Bourbon Day every day.
Yes.
There are 3 other triggers that you guys do at Sales Boomerang, which we like, which is, did they list their home for sale? Is there an equity alert? Did they get equity in their property? Those are things you can monitor outside. And then there's a bigger one, which is kind of life events that you guys monitor: diapers, diamonds, debt, divorce, downsize, death, all these things. So that's a whole nother thing that you guys monitor. So the more that we control and decide to monitor more stuff, we're just arming our originators with more information. And then we even set up, more of a centralized system and mechanism. So when we get those triggers, we get those alerts, there's one person quarterbacking that here. Another one sending out the email to the AE and the broker on the wholesale side. They're sending out the email to the originator and the branch manager on the retail side, and they're saying, hey, so-and-so, Miss Smith called, you need to call them, they want to refi. So we have it set up, but we took it a little bit further with Surefire top of mind and started to create some more automatic triggers.
Yeah.
And we're hoping to do the same thing inside Total Expert, and then eventually with Volley as well. So the idea is, a trigger comes, credit pulled, alert, email, text, here's what it says. Hey, borrower, don't forget to call Sam. Like the second it happens. That on-demand society that we're in demands that we all build our triggers like that. So that's kind of how all of this evolved and how we got in touch with Sales Boomerang. Right. And we, and we looked at another company. I mean, I talked to, I think, First American or maybe a credit company, and I don't think that they're bad partners at that. I just feel like this is like all you guys do. This is like what Sales Boomerang does. Like they specialize in this. Like this is like they've built up this whole robust thing for just this. It's not like we're this giant data company, we offer this. I want a guy that makes t-shirts and wears purple jackets and wants to toast bourbon with me at a trade show and lives and breathes this stuff. And literally you bought farm animals and put them on stage when you did a presentation, talk about farming your database. Like that's amazing.
That's it. So listen, Kevin, that was brilliant. Guys, everyone that's on this call that's paying attention, that's taking notes, listen to what this was in PRMG's DNA, okay? And we just happen to fit into their belief system. But you're talking to a group that 65% retention compared to 20% or less in the industry, and you just heard the process of how they got there. I mean, this is not something you typically hear. You gave me an exclusive on Bourbon and BS. Now we got an exclusive here of how you got here. And guys, it's brilliant. It's truly amazing. This is remarkable. And so,
can I just add one more thing and say,
please.
This is the thing. It's like about our business. Why would Kevin, an owner of my competitor, tell me this? Well, yes. we all need to do this, because fintech that wants to steal our business and our community, they're already doing this. So if independent mortgage bankers and local originators continue to win local, then our brand and our way of doing business stays relevant, thrives, and grows, despite what fintech does. That's why we're so open over here. I mean, it's a whole new age of video communication and being open and transparent and having honest conversation. I put myself out there recently, not in the best light, but I put myself out there, in LinkedIn and on these things, maybe over too much. Fine. If you don't want to watch, don't watch. But we're trying to provide value to the entire industry, because what's going to happen is there's probably going to be 30, 20, or maybe 10 lenders left who don't grab this information and implement it into the way they operate. And that's bad for consumers. If there's less of us, then that's bad for everybody. So, you have a choice as a company to grasp this stuff and make it part of your DNA, because there's companies out there that have been doing it for years. I mean, I just got off a call. I got off a call with someone who said, yeah, I can't wait to use the bank statement and income part of day one certainty, so I don't have to ask borrowers for 2 months bank statements and 1 month's pay stubs. There are companies that have been doing that for 4 years.
Yeah.
There are special companies that were given special access to that, ahead of time. And I get it. You got to test it out somewhere. But, it's not a fair playing field. This is not a fair game. You have to use guerrilla marketing and guerrilla tactics to win, or else the big bullies with all the money, the billions of dollars, they will bully you right out of business. And this is your chance to get even. So that's how I look at it. That's how I view things. That's why I look at us all being in this together. And that's why I openly share our strategy. I could hide back.
That.
I could hide back here and never tell anybody about sales Boomerang and mum's a word. For what? For what? For more people to lose? We all need to win more, and we need to win together.
Yeah, I love that. I love everything you just shared. It's brilliant, and it's, this is as Kevin's point, this is a chance to level the playing field when it comes to the depth of technology that you can have access to. I remember very early on, I don't know if I've ever shared this story in public, so we're going to share it right now. A lot of exclusives. I remember very early on, I won't mention the name of the company that said this. There was an organization that is still using our service, said to us, like, shouldn't you just sell this to just the biggest players out there? Why would you want to make this at a price point that's available for anyone in the industry? This is way too high tech. This is way too advanced. Like, this is like a secret weapon, and this should stay inside the best performers. And we were like, no, this is the exact opposite of that. The purpose for doing this is because the borrower is our customer, right? I always talk about this, guys, and this is, we're gonna get deeper into this retention thing in a second, because I think Kevin brought up a really good, interesting point. So let's dive into it and then keep going. But look, it is very important that we all realize that this is for the borrower, okay? Like a great medical product, okay? When a great medical product comes out, it's not for the doctor, which is Kevin. He's the doctor. Samantha is the doctor. It's for the borrower, right? And so everything we do is keeping the borrower at the center of everything, so that they can get advantages that otherwise they couldn't get unless some big company called them. So Kevin, I think you made a great point. I see Tom jumping on here, probably saying we need to keep moving, or somebody has a great question.
Well, I've got a pair of great questions lined up. First and foremost, Kevin, how quickly did you ramp up your record count with Sales Boomerang? Meaning, did you start with a test amount, or did you go all in from the get-go, and why?
Yeah, fantastic question. I love it. I believe we tested it for a year to see if it worked, and we tested it just with our portfolio. So I think we only bought 10,000 records initially. And then after we proved out and saw that it worked, we jumped that up to 100,000 records. And I don't know what our count is right now, Alex.
I think you're like 144 now.
Okay. So for anyone that wants to leg into it, I will say, if you want to leg into it, don't do it to decide whether it works or not. It works. Leg into it to develop your process and make sure that it works at your company. And then once you dial it in and you get everything done, then you can go full bore. So we actually went. So once we did the 100,000 records, what we did is, we offered the service. I think we offered as an a la carte service to our 170 retail branches to pay on their P&L, to pay for prospects, to pay for turn downs, thank you, to pay for, stuff beyond just what's already there. So the company pays for all loans funded since 2015 and every loan in our portfolio. So that's what the company pays for. And then we said, hey, branch manager, if you want to pay for any of your prospects, you could buy it, in batches of so-and-so. So then they work it out, and we have a whole accounting mechanism that we've created inside our company for all these a la carte services for our different vendors. So that was kind of our thought process and how we rolled it out.
Awesome. Great. And let me just make sure I piggyback on that for just a second. We are huge believers in pilot programs. As a matter of fact, we've rolled out a system that 100% of our clients start with a pilot for the exact reason that Kevin just mentioned. It works. It doesn't not work. It always works. If you care about the people in your database, it works. If you don't care, then you should never be a customer. But it doesn't work at your organization. And can we dial it in over the 6 months or 8 months or 12 months and then roll it out for everyone? So just know that. I love that Kevin mentioned that. Tom, do you want to ask the other question, or should I get into some of the other pieces here and then you ask the question? It's up to you.
Yeah, kind of related real quick, and this also for Kevin as well. What's the adoption rate by LOs at PRMG, and what's the adoption rate you've seen with your brokers, if you know offhand?
Well, I can say what I think it is, and of course we have our top LO on here. She can also answer, but you know, it is 100% adoption in the fact that every single trigger is, we make sure that the originator acknowledges that they got the trigger from us. So at a minimum, they know their company has their back. Their lender, if they chose to sold to on the wholesale side, has their back. Wow, this person's watching stuff on my behalf and making sure that I know, great. Beyond that, it's on the originator. It's like, we're done. Now, obviously some originators are better than others. I would say there's probably 95%, I guess, adoption of that originator, regardless of channel, then going back and making sure they follow up with the borrower. Sometimes it's like, oh yeah, that's me. I've been talking to him. I'm the one that pulled the credit. Great, awesome. But most of the time it's someone else, or something else is happening. And so that's probably the best way to answer that from my perspective.
Great. Great answer. Tom, thanks for sharing those questions. By the way, team, amazing questions. Keep them coming. That's exactly the kind of interaction that we want to see. So, you know, one of the big benefits of retention is free word of mouth, right? When you have a great relationship with someone and they're happy, they're going to talk about it. Unfortunately, if you do a bad job and have a terrible experience with someone, they're going to talk about that too. So number one, make sure you do a great job, take care of your customers, listen. And the more you retain, the more repeat business you get, the more likely they are to share that information with somebody else. They will talk about it. Again, Samantha, if you have the ability to sort of chime in here, I'd love to get your perspective on what, you know, repeat customers do for your referral business, if you have a second to jump in.
Hi, can everybody hear me?
Yeah, loud and clear.
Oh, perfect. Hi. Okay, so, well, obviously, repeat customers, if they're going to come back to you, they're also going to refer their family, friends, and other referral partners to you. So that's another key aspect to keeping every person that we close a loan, that we retain them for life, is what, I mean, I truly believe.
Yeah, and so so just to be clear for everyone, when you have a customer that comes back to you for a second or third or fourth loan,
Mm-hmm.
they are naturally bringing their friends, family, coworkers, relationships to you just because they've made the decision 2, 3, 4 times. Why not send someone to a place that they trust? Is that
Oh, absolutely. Oh, yes, 150%.
That's fantastic. I love it. So stick around, Samantha. We're going to call on you again. We have some other things that really resonate with what you and I talked about earlier. But you guys, what you just heard, the voice you just heard, Samantha, she is the top producer at PRMG. Okay, so you're talking about 1,100 loan officers. She's at the top. So listen to the things she says, because they work, right? And she understands this very well. So let's keep going. So word of mouth, right? First of all, let's get into a little interesting statistic. 83% of consumers say that they would recommend a company that they trust. And what Samantha just said is she is the company, right? PRMG is the company. She's also represented the company. When they trust her, they trust PRMG. And 83% of the time, they will refer someone. If someone asks for, hey, who'd you use? 83% of the time, they're going to say, hey, the person I worked with. So make sure you're doing a great job. And look, every single top producer I've ever spoken to, and Samantha can validate this, has said to me that the first deal is very important, but it's not as important as the second. That the second deal is the most important deal you can do with any borrower, because once you've done the second one, they're truly a customer. The first time they were a shopper, the second time they're a customer. Samantha, would you agree with that?
Oh, absolutely. Definitely.
So,
yeah, that is just knowing where the source comes from and what their intention is and what stage of the game they're in.
Perfect. I mean, listen, this is, you're hearing it from Samantha. You heard it from Kevin. Again, PRMG being at 65% retention compared to the industry below 20%, there's a lot of things they're doing right. And so you're hearing it here. I hope everyone is taking notes. I hope everyone is emailing people in their technology teams and going, guys, we really need to implement some of these things and write down some of the tidbits that you can just bite size and start using them right away, because that's the purpose of this. That's why we do this with TMC, to give everyone in the TMC family a chance to do what, and this is why PRMG is such a great partner. They're willing to share their secrets with you, because it's raising everyone's level, right? That's the goal. And so it's, you know, and benefit number 5, and this might be an obvious one, but it's worth saying things, right? Like even the obvious ones are worth talking about. Loyal customers will pay premium prices. Loyal customers, and again, Samantha can validate this, when you have a loyal customer that trusts you, they don't question you, right? If you tell them that this is the best thing for them, and they know you have their best interest in mind, and I hope you do. I hope you're not looking at your own pocket to recommend things for your customers. I hope you're looking at their situations to recommend things, because they will feel it. But once they trust you, to them, it's not about premium. It's about having the best solutions, having the best channels, having the best financial vehicle, which, by the way, with the business we're in, is a financial vehicle, right? And so they will pay premium prices without a question, simply because they trust you. And don't take advantage of that trust. Work with them. If there's something that is if it doesn't make sense to do a deal, and putting a notch on the wall that says, hey, got another one for the month, but it's bad for them, just don't do it, right? Just don't do a bad deal unless it's an absolutely last minute thing that has to get done to help someone. But again, that loyalty will completely overshadow any sort of other marketing out there that talks about our rates are lower, right? Because the trust is way more valuable than some sort of marketing campaign. Now, this is important. What does low retention mean? Okay, like in reality, you don't even know what you don't. It's hard to tell. Most people don't even know that there's 11 transactions that happens on average in a borrower's life, let alone understanding what kind of transactions they're missing out on. And so we do this analysis. We look at the history of a borrower's mortgage life, and we look at how people operate. And so what you're looking at is a timeline. This is a real timeline, right? This is a real scenario of a real borrower that had this sort of experience in their life for buying homes and getting refis. When it comes to retention, okay, here's what typically happens because of the low retention rate. That 2010 transaction, whoa, what happened? Oh, here we're back. That 2010 transaction is typically the last one you'll get. Now, from 2010 to 2013, you're probably going to end up sending lots of emails and lots of sending birthday cards and calls. And if you're good, you're doing those things. If you're not, then there's no chance you're getting the rest of them. But you're doing things, and you're hoping to catch someone at the right moment. However, it's a guess, okay? Now, people with great communication skills, people with great listening skills are going to be much better at getting the next deal. But with low retention rates, this is what typically happens, okay? You get the first one, you miss the rest, okay? And you don't even know about the rest. And you're like, well, when they're ready, they'll come back to me. Unfortunately, that's not the case, okay? Here's the truth. This is based on the statistics from Black Knight from 2019. 85% of your active borrowers, now hear this, the word that's very important is active borrowers. Active borrowers means the people that are going to buy a house or refinance in this year. Not the ones that are sitting, that are in your database that got their feet up on the couch and they're not planning to do anything in mortgage, real estate. They're not doing it. They're literally not in the market. Those people are not included in the statistic. This is a statistic for those people that are actively going to do something with a mortgage, which, by the way, in today's world is almost everyone, right? So 85% of your active borrowers will leave you every single year because the industry is retaining less than 20%. So if you think about it, the statistic is perfect, right? If you only retain 15%, that means 85% left you. Those are the 85 we're talking about. Those are the 85 you need to recapture. That's for PRMG, ready? It's only 35%. Think about that. Look at that number. Going from 85 to 35%, wouldn't you want to lose only 35% of your active borrowers and the rest come to you? Of course you would. How do you get there? What happens? When you have automated retention systems, loyalty programs, communication, when you have a great CRM like a Top of Mind or a Total Expert, right? When you have all of these technologies in place that help automated communication. One of the things Samantha said, and she can add to this because of the earlier conversation, she can add on top of this if she wants. I said, hey, how do you become so good at retention? She's like, look, number one thing I do, and the first thing she said is, I have automated communication to my borrowers and to my referral partners. Like, wow, here's somebody that instantly, top producer, okay, everybody take note. Top producer tells you right up front that the reason she has done such a great job in retaining her customers is she's included automation. She knows that she herself can't be everywhere at once. She can't be. And she knows how to use her tools to her advantage. Okay, so here's an example of someone that's using the tools to their advantage, where in 2010 they do the purchase, they're keeping in touch, they get a notification that a borrower may be perfect for a refi, they contact the borrower, they get their refi. They keep in touch, they look at what's going on, they find out that the person typically buys a new home every 7 years, 8 years, whatever the number is, right? Close to it. They get a notification from Sales Boomerang, or they're regularly following up with this customer for the right reasons, not just random reasons, for the right reasons. They get a notification, let's say that borrower is out shopping. They get a notification, say, hey, did you forget me? Oh, I'm sorry, I forgot you. Boom, they get the purchase. And then of course, 2020 comes around, they get the refi. So you go from doing one deal, because you have no retention, no loyalty, no automation in place, no intelligence, to 4 deals. That's not a swing of 1 extra deal. That's 4 extra deals. I'm sorry, that's 3 extra deals for you. 3Xing from 1 borrower to 3X. And by the way, the minute you do the second, you have a much higher percentage to do the third. The minute you do the third, you're pretty much guaranteed the 4th, right? So important to incorporate automation and intelligence into your program so you can focus on retention and customer loyalty, so the customer knows that you care about them. Not guessing, but they know about it. They feel that you care about them. And by the way, check out this statistic. One of the things that we get asked a lot is, hey, how many people from my database exist in somebody else's database? We got that question from day one. And at that point, we had no clue. But we've done the research, right? We've done the research. And when we ask this question, as a matter of fact, we don't have oh, this is going to be fun. I don't know if I've ever done this on a webinar before. I want everyone to jump in on this. Every single person needs to answer, okay? What percentage of people do you think exist in your competitor's database? What percentage of your borrowers do you think also exist in your competitor's database? Put a number in the chat, in the question in the chat, put a percentage. Whatever percentage you think. We'll give it 30 seconds. I want to see these answers. I cannot wait to see these answers, and I can't wait to give you the answer. We have nearly 6 million records under management. Right now, nearly 6 million records under management. And I can tell you precisely how many records exist in more than one database. If I don't see lots of answers in there, it tells me that all of you fell asleep, we're being boring, the information is not good enough, we're not entertaining you with good drinks. So please, put your answers in there. Let us know that you're listening. Let us know that you're not watching a movie or walking your dog right now. Give us some answers. I only see a few answers that popped up. Let's do this another 15 seconds or so. Throw in what you think, what percentage of your database exists in another lender's database, like your competitor's database. All right, let's see what we got going on here. Tom says 70. Dale says 200%. Dale, that would be an impossibility, but I like the way you think. 25% says Pablo. 50% we hear. What else do we got? Anybody else have an answer? I'm going to give you the number. This is an absolute fact. We just ran this number. Nobody else has a guess? All right. Less than 3%. Less than 3% of every record we have in our database. Okay? Less than 3% of every record that we have in our database exists in another lender's database that works with us. Think about that. Less than 3%. Of course, every customer is going to be in more than one database somewhere in the world, somewhere in the country, but it doesn't mean it's an active database. It doesn't mean it's a lender that's working something with it. I'm telling you right now, the lenders that use us, which is nearly 100 lenders, less than 3% exist in the same day. That's amazing. And why? Here's the stat. There's the stat right there. 79% of borrowers are going to go with the first lender they speak with. But here's what your goal should be. Your goal should be to be the first to present to every borrower a potential loan. Because if 79% of the time they're going to go with you, then that should be your goal. You should be the first one to present every new opportunity for them, right? Which is why this intelligence is so important. So you can be the first, okay? Now, knowing the stat, knowing the goal, here's something very important. Why should you care about the loans you lose? Why should this be of importance to you? Industry less than 20%, PRMG 65% and growing in retention, okay? Let me show you some real numbers, okay? This is real stats. Guys, this is a loan loss breakdown. Pay attention. This is important. This is valuable. Why should you care about loan loss? Here's why. This is a real statistic. As you can see, this is not PRMG because I didn't want to air out all the details without running it past Kevin and the team. So this is somebody that looks very similar to PRMG, not volume-wise. They're much smaller, but the way they've grown, what they've accomplished. So when we did the original loan loss report, we found out that their retention rates were 23%. That means out of the loans they had, that were inside their database, not new loans, the people they had inside their database, in the course of a year, they were able to retain 540 deals and lost 1,829, okay? That means other lenders took 1,829 of their existing customers and did loans for them in 1 year. They only retained the 540, okay? In the loan loss report, right, you get to see who's taking your business, okay? So how do we know they did this? Because inside, you can see we crossed out their name. This is their name. When we run our loan loss report, we find out who your competitors are that are taking your business from you and at what pace, how many records. This is a very important report. You can truly see who your competitors are, who you're losing to. You can do research, find out, is it the rates? Is it the process? Is it tech? You can understand. Without knowing the competitive landscape, you can just keep doing the same thing and not understand why you're not gaining any traction. When you have this, you're about to see the results of what happens after they realize how much they lost, who they lost it to, what they did since then. So after working with us, after getting this report of all the loans, and remember they're at 23%. Why do we choose this report? For this reason. Because after a year, you see that number? This organization, not PRMG, this organization went from 23% retention to 65% retention. 3x'd their retention. 3x their retention in 1 year. We delivered 111 notifications to them that they were able to turn into 1,540 opportunities that turn into deals, which means they only lost 829 and were able to save 1,540. Huge difference between what a year can do for you when you have the right technology, the right automation, the right information in front of you. This is the importance of understanding what you're losing and not just the business you're gaining. Because people are like, why would I want to know who took my business? So you know how to compete, so you know how to communicate, so you know what's out there, right? And now all the intelligence that comes to your team, 3x those numbers. Imagine 3xing your retention rates. That is the focus. Now look, this is very important, okay? And this is where we're going to bring Kevin back in, we're going to bring Samantha back in, we're going to talk about this. These numbers are because they did something very specific and something Samantha does naturally and something that Kevin and the PRMG team has given a hand to the rest of the loan officers, to their team, to their referral partners, to their TPO, right, third-party originators. They've given them a lending hand by incorporating in automation and intelligence. Because here is the biggest takeaway you can take from this conversation right now. Okay, that conversation is that takeaway is be hyper focused and ultra relevant to your borrowers, to your referral partners, to your team. Most importantly, to your borrowers. Hyper-focused and ultra-relevant. Do not waste your borrowers' time with things they don't need. Just feed them the things that are relevant to them, that's important to them, that they can use. Your referral partner, same thing. Your team, same thing. But really, the borrower is at the center of all of this. And so, Kevin, first to you, then to Samantha. How important is it to be relevant to your customer?
I mean, look at it. It's a relationship business. You know, you want to stay on top of the relationship any way you can. We all have relationships in our lives, whether personal or colleagues or business. And if you don't communicate with them, they just go somewhere else. And I mean, this is just basic communication at the end of the day. It's just basic communication, which is what relationships is completely founded on. It's what sales is founded on. And the better you are at communicating and the more modern way you do it, the better. You know, I appreciate Alex taking, 5 minutes to filibuster, because I was able to eat all of my Cane's chicken fingers. So thank you.
I figured that's what happened. I saw somebody come in and you said thank you. I'm like, he's eating. So let's not call on him for the next 10 minutes. Let him get.
No, I'm done. I'm so efficient, brother. I'm done. I wolfed down all 6 chicken fingers. Let's roll.
Let's go. So listen, this is so Samantha, you next. So Kevin just said this. It's just basic communication, and it is. But you, someone that's on the front line, someone that's constantly talking to the borrower. How different is the conversation when you call someone to just randomly see what's going on versus when you call someone with a solution and you say, hey, I noticed that this is going on in your life. I can solve that for you, or I can offer you advice. How different is the enthusiasm from your customer when you go from just basic chit chat to something that the customer can benefit from?
That's kind of a loaded one. So what I would say, I think in my mind, because I have to touch so many more people than other people that do more volume versus units, being relevant is actually short and simple. Cut to the chase on what solution and what you can offer them. Versus just selling all the fluff. I mean, if I have somebody that comes up on my pipeline and I know that the rate is 1.5 points off, I just literally pick up that phone, make the call, say, do you want to schedule more time to talk about this? But just keep it short and simple. And it seems like you get actually, people are busy too. So they don't want you just filling up their time as well. They want to know exactly how you can help them, how you can do that, what they need to proceed. And then also you have to kind of remember who your audience is. Every single different generation that I'm working with has a different way they want me to communicate with them. All of my boomers still like me to make a phone call to them and an email. Any of the millennials and certain generation X's and Zennials, they may just want me to shoot them over a text, say, hey, I just noticed blah, blah, blah. I mean, I think you have to be just very observant of who your audience is and remember that, so that you're not spinning your wheels and not working with people how they want you to work with them.
Samantha, that was so brilliant. Everyone on the call, what Samantha just said is probably one of the most valuable things you can take away from this conversation. You know what she does? She listens. She just said boomers and millennials. And she did not put them in the same exact bucket. She doesn't say, hey, I got 1,000 customers. I'm going to send the exact same email to all 1,000 customers, right? She did not say that, because that would not give her the results. That she wouldn't be ultra relevant. She wouldn't. She would actually push a lot of people away. If she sent a text message to every boomer, they'd be like, they'd pick up the phone and be like, I don't want to talk to you anymore. Stop this buzzing thing. My phone buzzes for some reason. It's always you, right? And they would stop talking to her. So Samantha separates things. She goes, you're here, you're here. You like to be called, you like to be texted, you like to get an email, you like to get an Instagram, right? And she knows that. She's not guessing. It's not a guess. So if you want to build retention, right? If you want to build retention and you want to be great, gotta listen, gotta care, gotta care. Sales Boomerang can't help you. Nobody can help you if you don't care. And what Samantha is proving, and you heard from Kevin, it's about caring first and then putting systems in place to support your existing beliefs. That's what it's about. And Samantha just proved that. Kevin just proved that. Even though he scarfed down 6 chicken fingers, and somebody put in chat that they want them too, by the way.
They're so good. So
you
good.
made us hungry. Samantha, you have been amazing. Thank you for joining us on Last Minute. You've been awesome. The amount of value added in this conversation is priceless. And again, it's so important for the big takeaway. Ultra relevant, hyper-focused, on your borrower, for them, not just for you. Understand who they are, understand what they want to be communicated and when, and you can get the 65% retention like Mr. KP and the entire PRMG team. So congratulations.
That number, just so you know, I mean, last year's numbers for some of the largest lenders out there, I think Freedom and Quicken were around 68 or 69% retention rate. And, good friend of mine, Phil Shoemaker over at Home Point, he does a whole presentation about retention and customer retention. They have a great model over there. They do a servicing model, and they help with all the touch points after the fact. So if you can get up into that upper 60s, you are competing with the big boys. Hate to say it that way, but I will say the big lenders. I will say that those companies are probably going to have higher than 68 or 69% with this new refi wave.
Yep.
So you'll probably see a bigger number for them. So I hope that we have a bigger number this year as well with all the refi business. But those are, you are competing with the top dogs of portfolio retention and fintech when you have those kinds of numbers.
Well, here's the thing, Kevin, and you definitely are. I mean, you guys are an absolute model for retention. You mentioned Freedom. I mean, their entire business model is that, and it's brilliant. They've executed brilliantly on it. And so, here's the thing. You cannot have that kind of retention without knowing what's happening inside your database. You just can't. I'm not even talking about Sales Boomerang right now. Forget us for just a minute. I'm talking about in general. If you're not paying attention to your database and you don't know what's going on there, and you're like, hey, whatever happens, we'll figure it out, you will never have those retention rates. And you always have a slightly lower profit margin because retention is much easier and faster moving, 60, 70% closure versus 5 to 25%. So you are just going to talk to 3 to 4 times more people to get the same deal as you get from your existing customers. So you can never have those retention rates. You can never have that profitability unless you care about what's happening inside your database. And so, Tom, I can see you're back on screen. It tells me that it's either time to wrap up or there's an amazing question.
Time to wrap up. I have two other.
He's on mute, so we couldn't hear anything he said.
Well, a little bit of both. How about that?
Yeah.
I got one last question in here, and it's actually for Samantha, if she's still with us.
I'm here.
Awesome. Attendee wants to know if you can share how long it took for you to ramp up utilizing Sales Boomerang with automated messaging via your CRM. And secondary question to that, after starting up that campaign, how long did it take for you to start seeing results?
Within the 6 months of PRMG launching it, they have it already set up for us. So, and I automatically every morning, basically the first email I look at when I wake up, which is about 6, have my coffee and start looking. It's my alert. And like my girlfriend Corey and I, we talk about it. It kind of sometimes it gives me anxiety. It's an anxiety that makes me remember who could be shopping me, who I need to reach out, who might be straying so that I can just grab it back in. And so it's definitely a useful tool, and it works well with us with Surefire and everything that we're already doing through launch. If that makes sense. Did I answer that right?
I think you
Yes.
did.
Yeah.
That's beautiful.
That's awesome. Thank you, Samantha.
Yeah.
That is literally
yeah.
my favorite email of the morning is what's going on.
I love it. It's her coffee time review. I love it.
Yeah.
This is great. And Samantha, just so you know, that is a typical high producer's mindset when they work with Sales Boomerang is to go, hey, this is my morning. I'm handing this off to either LOAs or my team or myself, somebody I have a great relationship with. I'm just calling them myself. But other than that, they'll hand it off to their team and they get right on it. And it just prioritizes your day. Instead of like, what am I going to do this morning? It's like, here's what you're doing this morning, and then everything else. So I love that you mentioned that in that answer. So guys, look, you'll see something on screen right now. Claim your loan loss report. Look, contact us. Go to our website, schedule a demo, or fill out the contact form. Check out. You don't have to sign up for Sales Boomerang. Just like Kevin. Kevin wants to lift the industry. So do we. Get your loan loss report. Just find out what's going on in your database. Just understand what you're losing. You don't know if you have any problems to fix unless you know what's happening. You can't fix what you don't know, right? That's just how it's always been, right? So contact us, get your report, just get the insights on your database, and then figure out from there. If you find out that you lost $700 million in loans in the last 12 months from your database and you were only able to recover 90 million of that, all right, maybe it's time for us to talk. But if you lost 300 million and were able to recover 150, 200 million, hey, maybe you're in good shape and right now it's not the time to automate something like this. But in general, no matter what, sales boomerang or not, focus on your database, focus on retention, focus on loyalty, compete with those fintechs because they are 100% doing this. That's why they came here, because they saw all the money, right? They saw all of, let me see if I can do this. I don't know if I can do this. They saw all of this, right? That's what they saw. They saw all this coming down on them. And they're like, hey, we need to get into the mortgage space. And so, look, pay attention. Pay attention to your database. Pay attention to your database. Care about your customers. Support your team. And make it very hard for those fintech teams to steal the business from the local community, guys. Tom, love being on here. Thank you so much. Kevin, you're the best. I can't say how much I love working with you and knowing you. Samantha, you're a gem. I can see why you've been so successful. And thank you, everyone, for your time.
Cheers. Thank you. Have a good one.
Bye. Thank you.
Thank you, Sam.
Awesome. Thank you guys so much.
Take care. Thank you, Tom.
I want to keep making it rain.
Making it rain.